The deadline to file your individual tax returns, it's nearly a month away. So we asked you what burning tax questions you need answered. Back with us again this morning is Yannick Lemay, tax expert with H&R Block. Yannick, great to have you back.
Yes, good morning.
We've got 5 questions today submitted by our viewers that you're going to answer. The first one comes to us from Ian. He says, I filed my taxes. I have already received my refund. However, I realized that I missed filing some claims. Can I still do that this year, or have I lost the ability to claim them?
So there's a lot of things in life we don't have control over, right? And things we cannot change. It's not true when it comes to taxes. We can usually go back up to 10 years if you think you've missed a credit or a deduction. At H&R Block, we offer what we call our free second look. So once you've filed your tax return, you can come with or without an appointment in an office. We're going to review your return for free. And based on the numbers we have, half of the time when we do so, we find either a missing credit or deduction. And in average, that missing credit or deduction comes up to $2,900 in tax savings.
Yannick, a follow-up just from me real quick. Can you do that follow-up this year, or do you have to wait until next year to do the refile?
Excellent question. So you don't have to wait next year. Once you've filed your tax return, you've received your notice of assessment from CRA, you're already ready to modify your tax return if you've missed out on a credit or deduction.
That's great news. Okay, our next one is from Zachary. It says, I recently bought a home with my partner. We are not common law. We both qualify as first-time home buyers. Can we both claim $10,000 as a tax credit?
So the tax credit for the first home buyers is 1 credit per property. That means if both you and your spouse bought the property, you cannot double the tax credit, but you can split it with your spouse. In most cases, if both of you have received wages during the year, the total tax savings will be the same whether you decide to split or not the tax credit with your spouse.
Next up, we have a question from Ryan. It says, I work from home 3 days a week. I think I have missed out on bigger returns simply because it seems daunting and I'm afraid of being audited. What am I entitled to, and what's the easiest way to make my claim? And I think this would be in regards to the working from home 3 days a week.
So even if COVID is over, there's still a lot of us that are working from home. The first thing you want to make sure is that you have on file the form T2200 signed by your employer. So this form allows you to claim any employment expenses on your tax return. And then you want to make sure, in most cases, the criteria you need to meet is that you're working from home more than 50% of the time for at least 4 consecutive weeks during the year. If you meet that criteria, you can deduct part of your electricity bill, part of your internet bill as well, any office supplies that you bought during the year that were not reimbursed by your employer.
Okay, next up. William asks, I own my own business and regularly use my car for work. I don't have documentation of that for 2024. So, can I still claim a portion of my car expenses?
This is a tricky question because in order to deduct any expenses on your tax return, you need supporting documents. Usually if you want to claim any expenses related to your car, you need a logbook. And this is not something I'm making up this morning. It's written in the law to deduct any car expenses, you need a logbook. A logbook is simply the details of the travels you've made with your car during the year. It can be either physical, so it could be a notebook that you have. It can be digital, so an Excel spreadsheet. There's also several apps on your phone that you can use to help you track the number of kilometers you've driven for your business.
So that's great info for William to have, maybe for next year's return. Our last question this morning comes to us from Robert. It says, as a retired senior living alone, when do I have to file my personal income taxes?
So even if you don't owe any tax to CRA, you want to make sure you file your taxes on time. The deadline, we've said it, I'm going to say it again because we don't say it enough, it's the end of April, both to file and pay your taxes. If you have any self-employed income, you have until mid-June to file your tax return, but you want to make sure you file your return as soon as possible, especially this year with the cancellation of the Canada Carbon Rebate. In order to receive the last payment of this rebate, you need to have filed your 2024 tax return by April 2nd. So this is in just a few days in order to receive the rebate on time. Otherwise, you'll receive the rebate later on. At the end of the day, it really is about your money, right? And there's more than 400 credits and deductions, so you want to make sure you get what's yours back in your pocket.
And the only way to get that, Yannick, is by
filing your tax return.
Nailed it. Yannick, thanks so much.
Thank you.
If you like that video, make sure to subscribe to the Your Morning YouTube feed, where you can find all kinds of new content posted every weekday morning.